Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for May the 24th to the 28th, 2021. So I think the big news this week and the question on everyone's mind is the crypto bull market over? Boy oh boy, what a sell-off we had this past week in the crypto space. As I mentioned in last week's video, I had noted that the crypto space, specifically Bitcoin and Ethereum, were in a precarious place and that the buyers really needed to defend, otherwise risk a sharper pullback. Now, did I expect it to drop 50% in one session or two sessions? No, I didn't see that coming, but that was always a possibility. So we'll talk about some of that price action at the beginning of today's video, because that was certainly the big mover this past week. And then we'll get into the charts for the equity space as we usually do and cover off what's going on there, because I think this coming week there could be some more volatility in that space, because this past week, to be honest, it was a pretty calm week for equities, not so calm for cryptos. So that being said, let's jump into the charts. As always, make sure you look at the econ calendar and the earnings calendar. Still some important names in terms of earnings that are coming out this week, including Nvidia in the latter half of the week, and there's some important econ news on the calendar as well, which you should make a note of so that you're aware of what's going on there. But let's get to the charts now. And let's first start off with Bitcoin today, because that was, boy oh boy, did that thing ever get hit hard. So let's just minimize some of our charts here now and get to the charts. So Bitcoin, let's start with the big picture. So are we now out of the crypto bull market? So if you've been trading cryptos for any given time, you sort of come to expect big pullbacks, because that's the name of the game. You have to be able to stomach the big pullbacks in order to be able to handle the big gains. This past week's pullback was very aggressive, given that we were actually in a bull market. So it's rare to have a 50 or 40-50% pullback in a bull market. So if you just, if you're trading the equity space, hearing a 20% pullback, that is typically categorized as a bear market. Now, those terms are subjective in nature. I did a video a while back called where I basically analyzed all the major market reversals in the stock market going back to the 30s, and I definitely suggest watching that, because once you've watched that video or you've done your own homework to see what major tops and major bottoms, well, actually I focused on the major tops there, what major tops look like, although I would certainly suggest doing the homework to look and see what major bottoms look like. They all share some commonalities, and I'm not going to go through that in today's video, because I spent like an hour and a half in that video showing historical examples of that. But Bitcoin has not shown that pattern yet. It's getting close, but it hasn't happened yet, and I'll tell you what it is in a second here. So for now, what we saw happening with Bitcoin and the rest of the crypto space is that we've been doing this Bollinger Band walk now for several, let's see here, 1, 2, 3, 4, 5, 6, 7 consecutive months of higher highs and higher lows. And if you've watched these videos for any period of time, you know the risk of going deep into Bollinger Bands, right? Because all it takes is one break below it, and you're going to see a bunch of selling. Usually it stops out folks who were chasing this weak market structure, this poor market structure, which we've talked about many times. So I've been reticent to go short Bitcoin until I made that warning last week, because I've been wanting to ride this bull market for as long as possible before I begin to look for shorts. Last week, I gave the indication that I'd be looking for shorts on Bitcoin if this last week's low got taken out, and that's what happened this past week. So this past, last week already, the reason why I started to break my bullish bias is because we broke below last month's low. That is very key, because that's showing you that it is actually a major reversal on one of the major time frames, the monthly time frame. So last week, remember that it's that orange line there. On this week, on the weekly chart, recall it was last week's bar that ended like this. Okay, so we closed below the prior month's low last week, and that's when I said last week, I said I'll be looking for shorts on Bitcoin. And then when I say Bitcoin, I'll be looking at even the alts, because the alts give you a little bit more beta there. So I'll be looking for a short here, but I don't want to be just chasing it because I'd rather wait and get good trade location. So that was the game plan. That was the game plan for Bitcoin and the rest of the rest of the crypto space. I actually got lured in a few longs on Monday because it looked like we actually bounced on Monday. So I actually bought a bunch of longs on Monday, but by Monday night it was very clear those longs were probably going to get stopped out. And so I quickly on Monday night quickly put on I think about 7 or 8 shorts, and thankfully I put those on because the market sold off very, very aggressively in to the tune of like 40%. In some of these crypto names. So what happens here now is that we went Momo down. I thought there was a chance that maybe we were going to hold this AMR. Remember last week we talked about the average monthly range, but when we closed below that, if you recall, if you watched last week's video, I spoke about the possibility of range expansion. That's always the risk when you have a outside bar like this. If it goes below that and you're below the AMR, average monthly range, that indicates range expansion. That means the game is on now. They're going to range expand. It's not going to be a mean reversion or a ranged down scenario. It's going to come back. It's going to continue. So that's what we saw this past week. Now, before I move forward, let's finish off the analysis here, and then we'll talk about where we go moving forward. So for Bitcoin, this is what we saw here. So if you recall, last week I got stopped out on my Bitcoin longs. I had said already that I'm out of my crypto longs now, on my Bitcoin long anyways, because I had broken below the prior week's this pivot. It was this pivot here, right there, right at that time it was 44,000 area, and that looked like 43,171. That looked like that I got stopped out on the weekend there. So, or prior to that, I think that was during the Elon Musk thing that stopped me out. So here on Monday, this is your Monday here, it breaks down. I got lured in to buy some stuff. This is not Bitcoin, but some other coins. It had popped shortly, but by Monday they had faded that move completely. And here, going into Tuesday, so Tuesday, Wednesday, Thursday, Friday, Saturday, there right away, that's a sell signal. Ideally, I would have liked it to come up here more as a pullback, because that's what I was hoping for. I was hoping that both Bitcoin and other coins will pull back in a bit and then get the selling. But once it did this, once you get the inside bar, this is trading with very, very strong momentum to the downside. It's not a Momo down move because this is not a straight move where there's no higher or lower highs. We actually got a higher high there, right? Because that's higher than that high, but it's very, very close. And more important, you're actually doing a Bollinger Band walk here. So boom, Bollinger Band, close inside. You're still doing a Bollinger Band walk. This here is inside the Bollinger Bands or below it, and you're not creating a higher high yet. That means it is trading with very, very strong downward pressure. So now that's what I did was, I found a bunch of coins where I could basically go something like this, or take it on a lower time frame, inside bar down, or using lower time frames to break that. For instance, I shorted Doge here. Let's see here, Doge. Where's Doge perp? There we go. So here, exact same, and Doge really collapsed. So that was really nice. You have the double inside bar there, and boom, that thing, just taking it on the daily chart netted 5R at the from the peak to trough, or from the entry to the bottom. So I got short a bunch of coins there, so that was nice to to kind of recoup some of those small cuts I was taking those longs earlier in the week. So going back to our Bitcoin analysis here. So now we're doing the Bollinger Band walk to the downside. Where do we go from here? Okay, so that's the question everyone's asking now, is where do we go from here, and are we still in a bull market? Well, the Bitcoin chart and a lot of coins, they broke the 200-day moving average. So it's broken below, and you can clearly see now that it tapped a couple of times, and it's having a hard time, breaking above that 200-day. So it's being met with sellers right now, and you can see that this is the price action that is indicating there's no lower lows yet. So right now it's doing the Bollinger Band walk. Okay, so we're doing the Bollinger Band walk, and you have to break above a prior high to extinguish that Bollinger Band walk. It hasn't done that yet. Now this is Saturday, as I'm recording this, Saturday the 22nd. On Sunday or even this Saturday, if somehow the buyers can step up, if they can break above a prior bar's high, then that will extinguish that Bollinger Band walk, and that means that this thrust of selling has now been extinguished. Not saying we can't see more selling showing up, but this initial thrust will have ended. All right, so that's what we're waiting for right now, is to see if and when this Bollinger Band walk gets broken. So for now, though, this is still going down, and I think probably on Sunday or Monday, because this bar is so small now on Saturday, it wouldn't be hard for the buyers to step up here and break out a prior bar's high, unless something, some fresh news comes out in the crypto space that causes more selling. I think that this large wick here will probably be a short-term local bottom. Okay, so for now, what's interesting is that if you take a look, if I go back to my weekly chart, actually I'll go back to the monthly. If you recall last week's video, I've drawn in this wide broadening formation for some time now, talking years, and funny enough, it found some resistance there, right? So it bounced off of that area. So I think we bottomed out near 29,000. I think we got as low as that in terms of a print. So we got as low as 29,563 on Bitcoin on the Bitfinex chart. That is right there on the lower Bollinger Band on that weekly chart. So that would have been an excellent spot if you just wanted to keep a buy order in there. That would have been a really good scoop there, because it quickly bounced off that area. The 50 period moving average still in place on the weekly chart, and there's your broadening formation. So right now, holding above it. So the question now is, where does Bitcoin go from here? That's a bit tricky, right? Because unfortunately for the buyers, for the bulls, the chart now is very, very damaged. Okay, so it's a very damaged chart, and it's going to take some time to repair this chart if you want to see Bitcoin prices go higher. More than likely, what's going to happen is that we're probably going to wind up in a period of multi-week or multi-month consolidation, because you've just created some really, really wide ranges, and it's going to be very, very hard to break outside those ranges. Let's just pretend this week is done. So let's pretend this video is recorded and done on Sunday. We have a new trading week, and Bitcoin opens right here in the middle of this range. More than likely now we're going to get stuck in this range at least for a week, right? So we have 1 week left in the month of May. And so let's say, if it cannot break outside of this range for the month of May, you'll have an inside week next week. So it'll be outside, down, inside. So that's still Momo down right now on the weekly chart, right? So then you have to, so this is, being forward thinking, more than likely you're going to get inside bar. If that happens, that scenario happens, and it goes inside bar, then you really want to watch the first week of June on which side of the inside bar does price break. We'll talk more about this next week, as this will become very clear, but I'm just sharing with you my thought process now around the price action. So this will be an inside bar. Let's say this is an inside bar that forms this coming week. Coming in the month of June, then you want to see on what side of price, what side of that inside bar does price break, because whichever way that breaks, you're going to have some time from alignment. Right now, why I got, I kind of explained why I started to get bearish and why my bias changed on Bitcoin last weekend. I just did that already in this week's video. The reason why is because we were trading with full time from alignment to the downside. Red quarter or red month, and obviously you're trading red weeks with these red weeks here. If you look at all the major market reversals, they always happen with full time from alignment. And by definition, they have to work that way, right? Because in order for it to be a big sell-off or a big ramp up, pump up, all the time frames are going to be either be red or green. So this is what you want to look for, is that when you have the conditions in place, such as all red, that's when bad things can happen. When all the conditions are green, that's when good things can happen. That's a very, very simple heuristic. This is why we always try to line up our time frames with our trades. So very simply now, if we go inside week next week and we break to the downside, that will be once again full time frame alignment to the downside for Bitcoin and probably the rest of the crypto space. And then you really have to watch out, because then you might get that 80% pullback that we often see in bear markets in the crypto space. If we go outside bar down here, inside bar and up, you actually might get a multi-week multi-week rally here, because then you're going to have mixed time frames. You're going to have a red quarter, but then let's say you open up here in the new month, new week, you'll have a green week and green month, and then maybe price comes back up here again until you run into this red quarter. But more than likely, you know, if you don't get the continuation of the sell scenario, if it does somehow pop up, then you're going to be stuck in this sort of range until maybe next quarter, right? The beginning of next quarter. So what would get me to change right now? So believe it or not, even though we've had, I think, like a 40-50% pullback on some of these coins, on Bitcoin, I'm still in the opinion that we're in a bull market, believe it or not. Why is that? I'm waiting for one final time frame, and I'm giving Bitcoin the benefit of the doubt here. I'm waiting for Bitcoin and Ethereum, for that matter, to hold one final time frame before I switch my bias to being fully bearish, and that is the 3-month chart. This is why I always show the chart, and this is why it's significant. Until Bitcoin breaks below the prior quarter's low, until that happens, that's when I will flip completely bearish, and then I'll, you know, wait. We can definitely expect to have that 80% pullback. That level is 28,540. We break below 28,540. There is no, you know, there's at that point you can definitely say it's coming back in deeper. The only tricky thing is it's going to be an outside bar, so even then it's not. It's a little tricky trading until you break below the outside bar's low for continuation. But definitely you're going to be looking for continued selling if you break below last quarter's lows. At that point, there's really no point being bullish except for maybe very short-term price action. So it's kind of uncommon to get that outside bar on the quarterly chart, and very uncommon to not get, if you break below the prior quarter's low, not to get continued selling. That's what we had back here in the 2017 bull market. The 2017 bull market ends right there when the quarter, well, it turned red, and then you broke below that prior bar's low, and you can see at that point you had a multi-quarter breakdown. 1, 2, 3, 4. Right? We had 4 quarters of lower lows, or at least lower highs. So if that happens again, you can have once again a protracted, at least a protracted multi-quarter selling. So that's what you'd expect to see if you break below last quarter's low. So that 28,540 area, that's what I'm looking for and watching right now in Bitcoin to see if that holds. So it's right there. There it is on the monthly. On the weekly, it's not that far away if you can go and break below this past week's lows, right? So as I said, that scenario where you have an inside bar, or let's say something really, something really big happens, and all of a sudden it goes outside bar down and down again. You take out that 540, 28,540. There you go. That hits that level, and that will be with momentum to the downside. So that's what you're watching for right now. Right now, the buyers stepped up, created a big wick. We still have a bit of time left in this week's candle, but more than likely, I think this wick will hold at least for this week, because I don't see the same level of urgency in the selling anymore. So I think the people who got flushed, and now we're back into the range again, and we can get stuck in here for a while. So let's contrast that now with the Ethereum chart. Let's go to Ethereum, because that was even more elucidative, right? So if you recall last week, I said watch out Ethereum, and I had been long Ethereum for a while, right? Look at the weekly chart here, and I said I feel very comfortable taking my profits here, taking some off if it breaks below that low. Why? Because it was a Momo up condition going into the Bollinger Bands. That's the Bollinger Band walk, and we know already, if you break that low, watch out, right? And so that's exactly what happened. Now, did I expect it was going to come all the way down to here? No. I thought we were going to at least get back in this area here. Maybe test the monthly open. That's that orange line. But that was an extra little surprise there. And I got short some Ethereum as well. Thankfully, once I covered there and it kept on going, shorted some more. So that was nice. But yeah, so that chart is definitely damaged here now. It's going to take a bit of time to fix. If you look at the monthly chart, you got a big shooting star. So that's the issue here, is that you got a big shooting star for the month of May, and more than likely you're gonna be stuck with the shooting star. Maybe the buyers step up a bit here, but no matter what, next month you're gonna be kind of stuck again. Like if somehow a buyer's gonna step up here, and it opens next month in here, you got a big shooting star and you're kind of in the middle range, right? Would it be uncommon to have an inside bar here, or something trading inside the range? If you break below that low there, watch out, you can come back out here again. So Ethereum here, this is what was interesting, is this price action here. So, so on the daily chart, right? So it broke below the prior week's low, as I mentioned already, right? So if we break below the prior week's low, watch out, and we formed an inside bar right there on Monday. Okay, so right on Monday, there's your outside. As you said, that was a Tuesday. Sorry, Monday, Tuesday, Saturday, Friday, Thursday, Wednesday. Yeah, Tuesday. Okay. So it looked like maybe for a point that maybe the buyers had stalemated things, but the fact is that Ethereum, you were still trading with the weekly time frame below you, and once Bitcoin started getting weak, you break below that low, and it was a flush. Now, interestingly, for whatever reason, on my Bitfinex charts for Ethereum, as I was doing the sell-off on the other exchanges, I was really expecting, because we know this pattern well, right? That Momo up reversal short. Very oftentimes, when you get this pattern play out, it'll basically stop everyone who got involved in that move, and that's what nearly happened on Ethereum on the Bitfinex chart. So I was expecting them to at least take out this low here. I think that would be the low that began the move. That's a Momo up here, so you expect this bar to get taken out because that's the beginning of the Momo move. But the outside bar oftentimes also gets taken out because that's a broadening formation, a fractal one. You expect to see a lower low there. So for some reason we didn't get that on Bitfinex, and I was scratching my head because it's interesting because I was looking at other exchanges, like I also trade on FTX. On FTX, you'll see it. There's the Momo up move, and this bar takes out that low and a little bit extra. So anyone who basically got started trading Ethereum back in April, they all went underwater. Now so that stopped them all out. Same thing with Ethereum on Binance. So for whatever reason, the Binance, there's the Binance chart. I know this is the spot price, but it's the same looking chart on the perpetuals as well. Momo up, and that bar there took out everyone from there to there and a little bit extra. But some, and even things like Coinbase, you didn't have the Momo up move. It didn't show as a Momo up, but it was. You can see that low did take out everyone who got involved in April. So interestingly, for whatever reason, the Bitfinex hands are a little bit. They're stronger hands there, and they didn't want to take out. There was buyers who stepped up, and they didn't allow to take out that lower outside bar. But that's something I'm watching now. If the selling picks up again, definitely Ethereum is that exchange maybe want to watch to try to take out that pivot low at the very least. Okay, so going back to the Ethereum chart, let's talk about that 3-month chart. So what would it take for Ethereum to really break that quarterly uptrend there? You gotta take out the prior quarter's low. That's why I think even this bar is ridiculous, right? Look at the size of that wick. It is literally a 2,000 point wick there. Amazing. So that's a huge wick. So what happens from here? That's anyone's guess. Is do buyers step up here and somehow take it back up, or do you break it back in? But right now the quarter's still green. Somehow it's still up 23% for the quarter. So this has not has not broken the uptrend yet on the Ethereum 3-month chart, which is really amazing, quite frankly. When you break below that low there, and then you're trading with full time frame alignment to the downside. Because even with this week's selling, you're still trading with mixed time frame alignment. You have a red week, a red month, but the quarter's still green. There's that blue line, right? So you're definitely going to see some dip buyers stepping in here, because right now the daily chart looks a lot like Bitcoin's. We're doing the Bollinger Band walk down. All you need now is for someone to take out the prior bar's high. That will basically break the Bollinger Band walk, and maybe we get a multi-day, multi-week rally. But you're just like the Bitcoin chart now. All the crypto charts are kind of like this. You have a huge red bar to the downside. Question is, you get continuation, meaning you break below this large wick on all the charts, or does it simply stay inside the range and then you have multiple weeks of consolidation, and then you need to wait and see on what side of price, what side of the higher low does price break out of. On the monthly chart, you do have the shooting star now. Going into next month, I think for this coming week, I would be very surprised if we don't somehow stay inside week, unless we can somehow trade closer to the bottom end of the range and take out this week's lows. Maybe that's what happens this coming week, but I think maybe an inside week is more likely. I think the inside week is the most likely scenario. Second most likely is that we break below this past week's low. Third scenario is that we somehow break above this week's high. I think that's a very low probability chance because that would take a lot of buying power and somehow erase the sell-off and for things to go higher. So more than likely we go inside bar. Second scenario we do continuation, and third scenario we actually take out that high. That would be my order of probabilities there. Okay, so for now, Ethereum's still in a bull market on the quarterly chart. I'm waiting for that to really tip over before I get ultra bearish on that name. Bitcoin getting closer to it, and again, that's the same framework I'm using for all the other altcoins and digital assets out there. So let's do a couple more crypto charts because that's kind of stuff that's in the headlines. And you know, even if you know, there's nothing really setting up right now in terms of the higher time frame charts, but there's so much volatility in there that there's really good money to be made trading this stuff intraday as well, because the ranges are very, very wide, especially compared to some of the tight stuff that's been happening in the traditional equity markets. So how is the shit perp chart holding up? So shit perp, okay, we got the monthly reversal, so that's significant. Okay, so these altcoins, they're now trading with full time frame to the downside. Has not taken out the prior quarter yet, so that higher level chart, higher time frame chart is still playing out. On the weekly chart, you did get that that completion of the inside bar reversal. Okay, so there's your inside bar up. Remember last week we indicated that it broke below the prior bar's low, right? And then this week we had the flush, so that you expect at least that low to get taken out. We did a little extra there, took out everyone down all the way down to here. So anyone who got involved the second week of March was underwater at some point. Okay, so shit perp now, again, same scenario. You're right in the middle. You're kind of in the middle of the range, so you're kind of no man's land for all these crypto names right now. It's very hard for things to get going. And again, same scenarios apply. More likely we stay inside bar versus going down, and very unlikely we take out the prior bar's high. So a bearish, a short-term consolidation and maybe a bearish with slightly bearish bent in the second week in 2 weeks or in the beginning of June. Okay, but we'll wait and see and respond to how price reacts to those levels and those ranges. Finally, I'll show you one final chart, and that's the total chart. So this is the crypto market by market cap. So up here, the crypto space at one point had hit a $2.57 trillion market cap. This, you kind of erased that. We do outside bar on the monthly chart now, right? So there's your outside bar. We got down went down back to as low as 1.2. So basically a 50% haircut in the crypto market cap. So let's see the 3-month chart. Okay, so there you go. It has not extinguished that not Momo, but the Bollinger Band move yet to the upside. It's still doing that. Still climbing that Bollinger Band, still doing the Bollinger Band walk. You need to take out a prior low, that low there. I think it'll be very, that's, you'd have to break below 735 billion in market cap for that to happen. So that'd be quite the haircut that would have to happen there. For now, outside bar, once again, you're kind of stuck in the middle range. Maybe just kind of, it's an outside bar no matter what this coming week. So this month's going to close out as an outside bar. This coming week, what happens? Well, it depends on what side of the range things play out. You got the Momo down move, right, on the weekly chart. Now the question is, once again, you're stuck in the middle here. On what side of that range does it break? Does it go continuation the Momo down move, and maybe you get that Bollinger Band top to the downside for some real scary selling to really scare out the crypto long diamond hand guys? Or do you go back in here and do an inside bar, and then wherever it breaks in 2 weeks it breaks? Okay, so there's your total chart. All right, so interestingly here on I didn't show it in the last chart, but both the shit perp chart and the total market coin chart has been holding its 200-day moving average. So that 200-day, look at that, it tests it, and the last few days, 1, 2, 3, right? It's tagged that. Even the big selling day, it's held below slightly before it popped up and held the 200-day. So right now, that crypto market cap is holding above the 200, and I think a lot of people are looking at that chart and seeing the same thing. Same thing, believe it or not, with these shit coins. Look, exactly the same pattern, right? So the hole in the 200-day, that's definitely something to watch here. You give that 200-day up, I think very quickly you may see the lows get taken out again. So that's something to watch out for right here, right now, as we're still doing the Bollinger Band walk to the downside, right? This thing goes inside bar on Saturday here, it breaks to the downside. That's inside bar continuation. It is going to be very stretched. This is already stretched as a move, but it's very possible then, you know, if it breaks below here, they try to, you know, scare some more people out, shake some more people out, and take out. You still got a green here. This is actually not a monthly chart here. This is a yeah. So this is incorrect. This level should be here. Yeah. So yeah, you're trading below last month's open here. So if you actually break above a bit here, you're gonna be back into last month's range, and then you're back in the range condition again. So if they're fixing the charts quite quickly here, especially if the buyers can take advantage of this small bar. And on Sunday, Monday, they break above here, you slide back up here again, then you're back into trading inside last month's range. And that's not, so if you're back in last month's range, right, you'd be looking at this monthly chart, you'd be back in here, back above this orange line. So that chart, although it will be red, you'll be back inside this range condition, and that will be less bearish than what you had when you're trading below last month's range and aggressively selling. All right, so that's the wrap up of the crypto analysis there. A lot of stuff to think about there. So let's now move on to our usual analysis of the equity markets. Not a lot of stuff to talk about there, but because we had such tight conditions. But let's take a look at some of our usual charts. All right, so on to the VIX. So we'll clean up the charts a bit here. So let's make it a little easier to look at. So the VIX is an outside month right now. We had a bit of a pop earlier. Oh, it's very tight, so I'm not gonna. It's okay. We won't use this chart very much. It's very tight stuff. It's actually very tight trading right now on the VIX. Some scares here and there, but as you said last week, we had the double outside bar, and unless you can clear that range, you're gonna be stuck in there. And that's kind of what we had this past week. So even though we had a bit of a scare on Monday. By the end of the week, it was clear it was going to be an inside week, to me anyways. You know, it's outside, inside, so now you're stuck inside that range, right? You're stuck inside that range, and even though it is a monthly chart that is an outside bar, the outside bar here is the orange level. So if you're below the orange line, you're trading below last month's lows. If you're above the orange line, you're trading above last month's highs. That's why right now you have this bar, right, that is both above and below those levels. That's why you have the outside bar on the monthly chart. But the reality is that you're back inside of last month's range. See, you're inside of those orange ranges. So this is why it's not ultra bearish. Even though it's an outside bar, it's a red bar. It's not ultra bearish because you're inside of last month's range. This is what I'm talking about with the same similarities with the cryptos. Is that if you can get back into last month's range, it's actually just consolidation. So you're not going directionally anymore. You're actually more range bound. So now you got a range bound condition that's gonna probably break this coming week. Okay, so this is probably some volatility coming to the equity space now with the double outside inside. Unless you do some sort of extra squeeze here, or they do another inside week, which would be very, very tight trading, more than likely they would probably break out of this range and then we go directionally here. So this is going to be a pattern worth watching. The double outside inside, something's going to happen with VIX this coming week. Okay, because for the most part, VIX this week was very, very tight stuff. That is a really super tight stuff. Not a lot of fun to be trading that because you basically have a flat open, well, a small gap on Monday. It goes inside bar down, inside bar reversal to the upside, right? Hits your levels, so scares everyone here. This day here, I think it popped up maybe 7%, 8% at one point. Hits the quarterly open, trades slightly above it, hits the 50-day, and then fades back in. That's the level we're always watching. That if you're wondering what that level is, right? That's the quarterly open. It holds. It means the quarter remains red, but you have a green month, a green week, and guess what? That's called Chop City. You can expect this, right? When you have this mixed time frame alignment, that's what I've been talking about the past couple weeks. Is you're gonna have mixed time frame alignments, and then you're gonna get this stuff. That doesn't make for fun trading if you like directional stuff. So that's what you saw in the SPY. The VIX, the SPY, pretty much the same thing. Even though SPY though, they did fix the charts, we still have 7 months of higher highs and higher lows on that monthly chart in the SPY. So SPY, even though we had a bit of selling the past week, they've repaired that chart a lot. And so for now, this week, tight stuff. Why? Because as we said, the last few weeks, it's like if you break below this orange line, it's going to be red month, probably red week, but you're going to have a green quarter. What's that mean? Chop. And look, there's your AMR. Tag that level again, and they're holding inside that range. So you're kind of stuck inside that range now. But again, now you got this Momo down move, inside bar. You break above there, maybe you go back higher again. You go after that all-time high. That's very, very possible right now. They go after those all-time highs. This coming week, though, we do have a few important numbers. Like that home sales number is definitely one to watch. Home sales is taking a bit of a breather now. The question is, people are, that's going to be one to watch, I think, this coming week, as well as GDP, which I think people already know that's going to come out of that. But the jobs claims number, once again, that should be interesting to watch, because I think the market's forward-looking here. The market's forward-looking, and the reflation trades are kind of already baked in. Right? People know that the market knows that people are going to be getting back on the planes, doing some holidays, going back into shops and shopping, going back to restaurants. But what happens after that? In 6 to 12 months time, and that's what the market's just trying to discount right now, is what's going to happen after that reopening trade. What happens after that? And that's what we need to watch for this coming week, especially in some of these commodity centric names. We'll talk about that in a few moments. So there's your SPY chart. Let's go Qs really fast. I don't want to go too much because all these charts look the same basically. The Qs did do a monthly reversal, but guess what? Went back in the range again. This is what I'm always saying. You need to see the ranges and see if you're back in there again, because if you are, you're not going directionally. And that's what happened this past week, is that you stayed below the quarterly open for a few moments and broke back in again. And look, you're holding that AMR, the bands, average monthly range. You're back in there again, but you're mixed time frame alignment, right? Monthly open, quarterly open, and you're doing that. And more than likely, unless something changes, you're probably going to wrap up the month inside that range, unless you can break above this monthly open here. That's going to be a tough level. Maybe you pop up this coming week, because that's the range once again. You're looking at that inside bar. But you definitely want to see if you can break above that level there, 339.14. I think that's going to hold for the rest of the month. We'll see. Okay, this week you're trading very tight stuff. See those lines there? That's an average weekly range. And look, you're just basically going from end to end. You're staying inside the regular ranges for the Qs. Okay, let's now talk about one final observation on the Qs. You did get a nice here the gap reversal, RDR, red dog reversal, happening right here on this is Wednesday. So we had a gap down, a pretty big gap down. It was down 2% into the open, but they immediately bought it. It was a big squeeze on Wednesday. They squeezed them all day, and on Thursday, look, they squeezed them a little bit extra, right? Just to gap up on Friday. This is very, very nice. I actually got long here on the ARC ETF, but that's the gap reversal. If you're a seller in here, remember last week I said you got to watch out here because this is trading full time frame alignment with the downside. So we actually got the inside bar reversal on a number of indices. It gaps down, you get everything you want as a seller here, right? It's like, this is awesome. I mean, you're short from up here. You're hoping for it to break down and break below last week's lows, and then for it to go further. But as soon as this happens and it comes back in, yeah, that is a situation where the sellers now lost control to the buyers, and then the buyers squeeze them and take them out the other side. So now what we have there is a higher high that's higher than that low, right? So that low is higher than that low. So that is kind of looking at a double bottom. So short term, and I'm not a big fan of double bottoms, but enough people see them, they may play out. That is pretty clear that this is a double bottom type of pattern. We may see that play up to the upside and get some more upside. But then again, there's that monthly open. Very hard to crack that nut. Let's go Dow now. Dow continues to be strong, strongest of all the indices. Look at that monthly chart. 7 consecutive months of higher highs and higher lows. Looking like a doji so far. Nothing too major to be worried about. But it is doing the Bollinger Band walk, right? So that is something worth noting. You got to break below that low there to break the Bollinger Band walk. But right now, it's still climbing that Bollinger Band. Weekly chart, we did get the reversal, a very short one, but it was very short-lived. It went Momo down, all right? But they immediately went back into the prior week's range, so you want to watch for, because as soon as you break back into that range, you're going back in the range again. It's not directional anymore. And then they quickly reclaim that 8 period and the monthly open. So even though it closed Momo down, if you break above that high, it's very likely we break back in there and take out that high again. So Dow, actually not a bad looking chart to end the week. What about Russell? So Russell. Okay, this is the let's go back to monthly here. We did get a reversal here on the monthly chart, went inside bar down, but look, they fixed it right away by coming back inside the range again. Now on the weekly chart, looks like so. Inside week. That's very, very tight trading there. So basically it's a nothing burger kind of week. Mixed, not mixed time frames. Actually, you're trading full time frame alignment here. So the bias is to the downside, but because it's such a tight range, they can't hold it below. You're stuck in there. So now you really want to see on which side of this range this price break on the Russell. So yeah, so you can see there's your Monday inside bar, up on Tuesday. You want to be bearish to the downside, and you got your bearish scenario, but they quickly bought it right away. You see down here, there's your average weekly range, tags it to the T, comes back up again, and once it starts coming back up, you got to get out. But because this is the weakest of all the indices, maybe the Qs are a little bit weaker. Actually, no, the Russell is the weakest now because we're trading with full time from element to the downside. It tags that quarterly open and holds. So that quarterly open, once again, they're keeping the quarter red there in the on the Russell, and this thing continues to be the laggard of the bunch. So Russell, the weakest of the bunch. The Q is actually exhibiting some strength here, and the Dow, obviously the strongest of the group. Let's do a few more charts and we'll wrap things up. Emerging markets, nothing weak. Just want to highlight this. Okay, you did have a monthly reversal, right? That played out, but it's now back in the range, and now we have the buyer stepping up, defending that AMR, and now we're stuck with an inside bar. We are trading full time from alignment to the downside though. So if you break below that low there, that will be significant this coming week. If you break below that low, that is very significant, because then that red line, that's your quarterly low. All right, so you break below there, then you really need to watch out. That will be indicative of some further selling there, because that will break this Bollinger Band walk that's happening on the quarterly chart. You see that? It's an inside bar right now. If you break below that low there, that red line, that will break that Bollinger Band walk. That'll be significant. Look, it's happening on the top of that brown formation, and then possibly you fade back into the range again. Okay. Now let's talk about two more charts. Let's talk about the bonds and then gold, because there's an interesting thing going on between gold and bonds. So the bonds chart, as I've been saying for the past month or so, that's what we're always looking at the ranges, right? Because right now you're stuck inside of last quarter's range. Bonds don't move that fast. They're not supposed to. When they do, you have to watch out. It's all about that rate of change for bonds, right? So the levels are important themselves, but obviously the rate of change is also very important, because bonds is supposed to be a slower asset class, and that's what people typically have in their 60-40 allocation splits. The bond market is supposed to trade slower because it's supposed to be a hedge, and number two, it's supposed to trade in a negative correlation to equities. Because if you have a 60-40 split in your, you're running one of those 60-40 portfolios or 70-30 or whatever that split is, you expect bonds to hedge your stock side. The issue right now we're seeing is that bonds and stocks are trading in positive correlation, meaning if prices go up, means bonds go up and stocks go up. Well, that's good, right? That means you're doing well in your portfolio. The problem is that if prices go down, you're losing both in stock and in bonds, and now you have a completely correlated portfolio and it's all going down. That's not good for that kind of allocation mix. But that's what we're seeing now with the current market regime. We have a correlation in bonds and equities. That's very, very worrisome. How does that play out? I don't know. I'm not sure how it plays out, but you definitely need to watch that, because that's not a situation that is tenable for a lot of market participants. People are going to have to de-risk or de-leverage or change their allocations if that continues, because you cannot have that kind of really strong correlation and have the same sizes on. Otherwise, you're going to get run over if there is some sort of panic sell. So right now, inside bar down on the TLT chart. It popped back up though, so you're actually setting up an inside bar reversal right now, but we have still a week left. But you're deep inside the prior quarter's range. So I'm still saying it's gonna be tough for TLT to do anything but go inside quarter for the rest of this quarter. Okay. Now the buyer stepped up a bit and kept the time frame alignment to the upside. So this 2 weeks now, we had some time where it was actually trading below the quarterly open, and so for a moment we had full time frame alignment to the downside. But every time we dip below, buyers step up very, very quickly and hold the prior monthly's low, and we hold above the quarterly open. So this coming week, inside bar. That's why we're expecting something to break this coming week. Something's going to happen on the equity space, on the bond side, and we're going to see a resolution to this really, really tight trading condition. More than likely, I'm not saying it's going to happen for sure, but more than likely, given how tight things are, we're going to expect some range expansion at some point soon. I could be wrong. Maybe they wait an extra week to really, really frustrate people and to make the trading really, really choppy and really, really tight, and then we explode in the month of June. That could be the case. That very well be. We could get another squeeze for a week here and get more consolidation. But eventually, we're going to get range expansion, and we do. That's going to basically be violent. So on the TLT side, we've got a Momo up now on the daily chart. So we're very close to taking out the prior week's high. or this week's high, that's an inside bar, right? So if you break above Friday's high, it's inside bar up. The problem, this is weak market structure. This is very poor structure because it's a Momo up move. We break below this low here, it's going to come back in the range again. And this is why maybe we stay inside this range again for another week. It's possible, but I think it's enough econ news and enough earnings news that this range should break. But let's watch it and see what side of price it trades on. Being very, very reticent that there's a monthly open right here and the quarterly open there. And so long as you stay inside this range, it's chop city, right? You're just going to get stuck. So that's what you're seeing with bonds. But every time you see bonds move up, the Qs have been responding in kind, because we've been watching that 10-year. The TLT is obviously the 25-year plus long bond, but the 10-year yield is one worth watching as well, because these two things have been very, very correlated with equities. When we see the 10-year go down, so the yields themselves go down, that's good for equities, specifically good for high growth names. So this past week we saw that bounce in the Qs, and we got that that sell-off here. Sell-off being a strong word. That minus 2.7% move in yields on the Thursday there. We broke down slightly on Friday. So the question is, again, it's look at the 10-year yield here. It is tight, so it's a very, very tight range here now, and it looks like we could trade it in this range until the end of the month. Right, so even though we have an inside week here, you can see the AMRs. See the AMRs right there. We're just trading inside that AMR, right? We have mixed time from alignment, red quarter, green month, and we're just doing this. What's that called? Consolidation. It's not expansionary, right? It's not range expansion, because if you look in the past, range expansion happens when you're outside of the average monthly range, right? So here, it breaks above, it stays above, and you get a multi-week expansionary move. But if you stay inside the ranges, guess what? Yep, that's just basically consolidation. So that's what we're seeing right now, consolidation in the bond space. So the bonds are definitely correlated right now with gold, which the narrative makes sense, because gold is largely driven by interest rates. Right now it is anyways. It's not there unless there's some sort of geopolitical fears out there. People rush to gold, but for the most part, gold will trade in relation to real interest rates. If interest rates go up, not good for gold. That's a simple heuristic. If interest rates go down, that's good, because they expect that means a weakening dollar and a strengthening gold price. So let's take a look at those gold futures here, and gold has been the surprise mover for me. So I know that we have the positive correlations in gold, but I was expecting that gold was going to be more range bound or tighter than it has been trading, sort of what bonds have been doing. But gold, I was just saying, it's I thought it was going to stay inside quarter, but I thought it was going to be a smaller quarter. Right now it's actually up close to 10%, so not bad whatsoever in gold. The question now has it gone a little bit too far, too fast? Because now we have two big up months, a month left, right? 1 more week left. On the weekly chart here, we tagged that Bollinger Band high. Not a reason to get short by any means, right? But this is when you need to begin to watch out here now, because here you want to see, can it go and begin to do the Bollinger Band walk? It is trading above the average monthly range, so this is a higher range than average for gold. So definitely a nice move in gold, a larger range than average, and so it's an expansionary move. And again, we caught that one here off the inside bar reversal. Remember, we caught this move, explaining this one here, right? It was going Bollinger Band walk down. When it broke above there, right, that was the breaking of the Bollinger Band walk. Here was a second scare, but did not take out that prior low, and then it went inside bar down. And as soon as that happens, that's the long signal, and you're in. So now with gold, this is the tricky thing here. So that it went outside bar, inside bar, and then it went up, but it fell back in the range again. So now what happens? If you break below Friday's low, you might get some selling to pull it back in again. That could very well be a possibility there, or somehow it works its way back up again, really based upon what the bonds do. So I think that's really being driven by those interest rates. So keep a close eye on the bond market, because right now, even though gold's moving higher, right, we know that it tagged the weekly upper Bollinger Band, is doing the 2-day Bollinger Band walk. Okay, so it's actually Momo up as well. So Momo up, Bollinger Band walk. This bar is not closed out yet, so you need to see a lower low, and that will break the Bollinger Band walk on the 2-day chart, and break the Momo move, and then possibly you fall back in the range again. So this move here, that's kind of happening already. Not great looking here because it's an inside bar. You break below that low, inside bar reversal short on gold. Gold may have to have a bit of a pullback here, a bit of consolidation. Again, watching the bonds to see how that plays out in conjunction. So boy, that was a lot of stuff we covered this past week. You know, I led with the crypto space. Lots of stuff to watch out for there. Now, even though I think we're in for some tighter consolidation, assuming that local bottom holds, and I think the action is probably going to be in the equity space this coming week if we can break the ranges. If we don't break the ranges, we're going to stay tight until the end of the month. Again, crypto space, I think it's no man's land for swing trading right now until we get some decided moves outside those ranges we talked about in the beginning of the video. So I hope you enjoyed this week's video. As always, if you liked it, give me a big thumbs up. That way we'll get more eyeballs in these videos, and that will keep me motivated to put more good stuff out. At the same time, very curious to hear your feedback. If there's anything you'd like to have included in these videos, or if you have any feedback on how we can make these videos better, always open to that. So drop a line either through YouTube in the comment section, or head over to the trading blog, thetradingedge.org, and drop me a line there. As always, I'll trade well. Trade safe out there because it could be small volatility. I hope everyone is staying well, and stay strong. All the best.